Hello, it's Adil bringing you a review of the FTSE 100 on Tuesday the 18th of November 2014, end of day analysis. Okay, so confusing to say the least. Okay, so let's try and decipher and deconstruct exactly what's going on here and trying to interpret market price action. Okay, so basically, where can I start from a fundamental perspective? It's a jungle out there at the moment, and obviously Japan seems to be center stage. Okay, right. Let's try and fit all these jigsaw pieces together. Okay, so yesterday we had Mr. Cameron. Okay, over the weekend G20 summit. Okay, basically alluding to or referring to negative growth. Okay, and then we had. The US market's obviously positioned to be in a potentially a bearish scenario. Okay, as you can see overnight, I mean, this is the FTSE that's up 37 points today, 6710. But overnight, as you can see here, the Hang Seng was down by 1.2% almost. It got hit hard. Okay, and obviously the Shanghai was hit hard as well, down 16 points, 0.7%. Now the only thing that obviously was kept afloat was the Nikkei. And that's one of the reasons why obviously the FTSE did gap higher initially, and I didn't expect the Nikkei to go higher because obviously we had the day before we had the Japanese GDP data that was very weak. Okay, the sales tax hike delay was already discounting the market to a large extent. Okay, and obviously was already being front run with the USD JPY still stuck below the 117 level even after the weaker GDP release from Japan, which confirms that it was already factored into the market. So that was the case, and obviously the snap election as well, that's been called again in December. That again, it was already factored into the market as well. So technically the stock market had become immune to that and already factored that in. Now the focus then should really be on China. Okay, obviously with regards to the interconnect was forcing the indices higher, and from my perspective, always it's China always generally gives you the correct risk on risk off scenario. Okay, and gauges the market in the best way or the best form. Now that was the case. That was the situation that we found ourselves in. So overnight, obviously the US markets are into resistance. Obviously we had Japanese GDP that was supposed to create global growth concerns and create a risk off type scenario, especially given the fact that USD JPY is still below 117. And given the fact that it's a carry trade, or it's the risk trade that dictates all movements in global markets, and that's basically how we were supposed to or attempting to interpret that. Adding the fact that we had ISIS concerns, okay, geopolitics. So we've got Russia-Ukraine situation now escalating again, okay, with regards to Russian troop movements and NATO accusing them of a large build-up there. Okay, that alone is a concern, and also we've got situation in Palestine, etc., with regards to several individuals. Whether I think there was a Palestinian mosque that was obviously hit by the Israelis, and then obviously vice versa, the Palestinians hit an Israeli synagogue, which again, should be condemned on both sides. And houses of worship certainly should always be respected, regardless. Okay, so that's basically what's happened, or situation that's occurred there. Okay, so we have geopolitics, socio-economic concerns, obviously from Japan, a weaker GDP. I mean, you can try and interpret whichever way you want. Okay, it's negative. Okay, even with all that QE, yet still you create this negative number. So therefore that confirms that obviously the monetary policy isn't working. Okay, so that's basically how we interpret that. Then obviously we come into today, this morning. Oil prices obviously have been hit quite hard. We're at $75 still. Okay, even though there's all this talk about OPEC. Yet oil price still remains at $75, and still it's falling as we speak. It's still at 74. So therefore, obviously the FTSE is commodity led. We've had copper down, we had iron ore down. So therefore, it's a bias. It should technically be risk off. Okay, should be a risk off scenario. So that's basically why I came in bear. I was bearish yesterday. I was bearish coming in today. I got stopped out on my FTSE short at 6706. I have subsequently retaken that FTSE short at 6710. And I still maintain my bearish bias based on the fact that Shanghai and the Hang Seng are negative. Yes, the Nikkei is higher, but the USD JPY hasn't really moved significantly to justify any move higher, other than the fact that yes, we've had a weaker GDP versus the re-election, okay, and obviously a sales tax hike delay, and that's only by 18 months. So What is that going to do? A delay is just delaying the inevitable, okay, or postponing the inevitable, and within 18 months time again that same scenario, same situation will occur. Okay, so it's still negative from my perspective, and given the fact that USD JPY has failed to move past the 117 level and Euro JPY has obviously struggled as well, that's basically a risk-off scenario. So that's basically what we were dealing with. So I expected a bearish scenario, and the reason why the market's reversed today is because we had stronger German data. Okay, so that's basically a reason why. I'll bring up my economic calendar from that perspective. Okay, so basically we had stronger ZEW data. Okay, much stronger. Okay, much stronger ZEW data. All that's already been factored into the market now, from my perspective, given the fact that euro is now at 1.253. Euros around the 1.24 level, and then you could justify, yes, it's a good stimulative, etc., from a currency perspective, but obviously with the euro being at 1.253 now, it's slightly negative. But having said that, strong economic data is strong economic data, and it certainly needs to be respected, and that's basically what I am doing. I am respecting that, but given the fact that the FTSE is now into resistance, and it certainly has factored in all that bullish news, I'll focus my bias on there. Okay, so bear that in mind. Okay, so, and also with regards to last Friday, we had weaker data, construction data coming out, and obviously Mr. Cameron obviously being bearish on growth prospects going forward. Okay, so they were the scenario concerns that we had. Now this morning we've had inflation data come out much better than, well, not much, but better than expected. And if inflation data comes out better than expected, and now we've got news on the wires as well with regards to BOE, Mr. McCafferty. Eurozone growth is a particular concern. Again, we've already had that. There are warning signs about global economy. Again, he's reiterating what everybody already knows. Global growth concerns certainly remain a dominant theme, and equity should certainly be concerned. Russia and Venezuela cracking first on oil prices, etc. Oil prices I've already explained. I've already put that forth, that argument. And Mr. McCafferty says he's been voting for rate hikes consistency. So basically, sterling and FTSE have an inverse relationship recently. Or, well, any currency now has an inverse relationship. Basically, I mean, you've got the euro versus the eurozone, okay, and then you have the likes of the dollar. Obviously, again with that rising recently, there've been concerns there with that rising too far, too quick, okay, too high, too quick, and obviously that's hurting their export sector as well, because this currency wars. Every nation wants to debalk its currency, devalue its currency, in order to benefit and help the export sector. Okay, so it's currency wars. Okay, that's basically the reason why there's an inverse relationship. Now, if I bring up a chart of, actually, I have not loaded it up on here, but basically, I've got it on my other screen here. I mean, you can clearly see on the, if you look at your GBP USD daily chart, and we are looking at potential. I mean, there's a bottoming tail there, doji now, and certainly looking for a potential reversal. So that's, I mean, we are making a base around this 1.56 region, 5650 region. Now I'm actually going to swing long on that, so I do have the fundamental analysis service. If you are interested, if you send me an email, I'll add you to that. Okay, so looking for a move higher in sterling, and obviously that's an inverse relationship with the FTSE, and looking for a potential reversal there based on Shanghai and of China being negative overnight. Okay, and they generally do read risk sentiment the best. Okay, so that's basically where we find ourselves. So with regards to the FTSE predominantly, I mean, Europe, yes, it has a bullish argument with regards to ZEW data and Mr. Draghi's QE program, or QE carrot will always remain. But with regards to the FTSE in particular, we have weaker commodities. Okay, we have weaker economic growth. We have higher inflation coming through now, which is obviously higher interest rates, so negative in terms of disposable income going forward. Okay, and obviously higher borrowing costs, and given the fact that Mr. Cameron himself is obviously bearish on growth as well, and China is down overnight, US markets are now into resistance. I mean, one of the key charts that I've already tweeted, and this is something that certainly needs to be respected and focused upon, okay, is obviously the Dow is at double top or approaching double top resistance, but it's the Dow Transports. Okay, the Dow Transports has a H&S formation. Dow Transports generally leads the global markets, so always keep an eye on that, and that's basically what I'm expecting, a failable flag, and obviously this right shoulder here plays out and down we go. Obviously we all know that's based on growth, and global growth certainly is a concern at this very juncture. Okay, right, so let's go back to our FTSE 100 now. Okay, FTSE 100 chart we're focusing on. If you look at your daily chart, we had this inverted head and shoulders formation, which I've highlighted for some time. Okay, we are slamming into the 200 MA. We've slightly paced through that, and the horizontal resistance is around the 6725 and 6710, which obviously we are approaching. So from my perspective, we are into resistance. Yes, the inverted head and shoulders target is 6770. Are we going to hit that? No. Why? Because commodities are weak. Okay, commodities are weak. I mean, we had a report from Moody's today as well, which was quite interesting. Let's just have a look. I mean, we've already had New Zealand getting hit as Frontiera's auction shows whole milk powder price index falls and global dairy trade falls as well. Okay, that's something that certainly is a concern with regards to commodities. But we had another, basically a report from Moody's. Okay, Moody's global base metals industry prices remain low and outlook stable. So basically a bearish forecast with regards to commodities going forward. So that's certainly not good for the FTSE 100. Okay, so again, that's negative. You can certainly find that report on Moodys.com. Okay, global base metals industry prices remain low, outlook stable, therefore negative for miners, negative for FTSE, which is a commodity index. Okay, now the FTSE 100, as you can see, is into this 200 MA. The FTSE 250 or even the 350 is slamming into its 200 MA and previous support equals resistance. So from that perspective, keep an eye out for that. If we look at our FTSE 250 now, FTSE 250 is into its 200 MA and is into diagonal trendline resistance. So you have multiple indexes that are into resistance. Now you can see the volatility index as well. The 60-minute chart has created a bull flag. Okay, so you had a bullish engulfing candle here. Okay, on the 17th, we've been consolidating and we've put in our bottoming tails, and this is a base, looking for a base to propel higher. And obviously, if the FTSE volatility index moves higher, then obviously the stock market or the index itself moves in the opposite direction. So that's basically what we're observing, and we are obviously holding this support zone. As you can see here, we've held this support zone here, and so we are into the territory where the FTSE could have a considerable decline. Okay, could have a considerable decline. So certainly focus on that. Keep an eye out for that, and that's going to be very interesting going forward. Okay, so FTSE 250, as you can already see. Now we can go to the small time frames for you. Let's go to our 60-minute chart of the FTSE 100. Yes, we are making higher highs and higher lows. So from that perspective, one can't argue on a 60-minute chart that we're into resistance. The only horizontal resistance that you have here is the 6725 region. That is going to be of importance, and then we have this 6700 region as well. So that's something that we are going to be focusing on. Other than that, I mean, if we go back from our 60-minute chart where we go to previous support equals resistance, these are only the zones that we can potentially encounter. We have this resistance level here. So based on our previous support equals resistance, yes, we are into resistance. We do have a doji candle that was registered on the 18th, okay, which is today at 10 o'clock in the morning, and ever since then we've just been consolidating sideways, potentially moving lower. Okay, so the 60-minute chart certainly seems to be all exhausted. Okay, now there is another chart that I would like to share with you with regards to the let me see if I can load this up for you. In the meantime, let's just have a look at the whilst I get that loaded, let's just have a look at our see if I can just maximize this. Okay, understood. Okay, so the top performers today, top performers from the FTSE 100 perspective, and this is going to be quite interesting. Let's just have a look, see what the top performers were for today. Okay, so Rio Tinto was still negative, so again that's something of concern if you are a FTSE trader, because you don't want commodities in the worst performers, you'd prefer them in the top performers. Okay, so that's certainly one aspect that we need to focus on. Okay, so we've had Reckitt Benckiser, HT Group and Standard Chartered top four. We've had Tullow Oil. Yes, okay, that certainly explains why the FTSE from that perspective was certainly bullish today. Rand Gold, Sports Direct and British Sky. So strange. I mean, you've had Dixon's, AstraZeneca. Yes, we've had the pharmaceuticals up because there was a takeover, so that itself helped the FTSE as well because they are heavily weighted. And Euro hits 1 month high versus sterling. Just waiting for these charts to upload and I'll be able to start discussing them with you shortly. Interesting. Okay, so right at this very moment in time, my bias certainly remains bearish. and we will let price action dictate and allow the markets to confirm who's right and wrong. Okay, that's basically what it all comes down to. We have our stop losses in place. If your analysis is wrong, then obviously your stop loss gets hit, and then we have to basically reanalyze from the market, and then observe and weigh all the variables up together. Okay, so let's just okay, so these charts are being loaded now. So this is an insight that I want to give you as well in terms of the service, or in terms of the sector. It's very important to have a look at the market from that perspective as well. Okay, let's have a look here. Okie dokie, right, let's have a look. Okay, right, let's just have a look. Right, so that's your chart in China, which obviously isn't looking very healthy right now. Okay, so basically you have the pharmaceutical sector, and this is where the reason why I was bearish on the FTSE yesterday as well. We had a perfect H&S formation, and obviously we were looking for gap fill below on the pharmaceutical sector, which obviously was going to send the FTSE lower. Little did we know, well, lo and behold, obviously we had this a takeover or a bid or a merger, and obviously that sent the pharmaceutical sector in the opposite way, and that's one of the reasons that explains why the FTSE obviously was higher from the outset. Okay, now we have a look at the banking sector. Banking sector has remained at resistance. Again, that's another argument or reason why I'm expecting the FTSE to move lower, because you have this trend line that was potentially on the verge of being broken. We've got an unfilled gap below, which is obviously going to send the banking sector lower, which again is going to send the FTSE 100 lower. Then we had the oil producers. As we all know, we've hit that gap fill. Yes, we did have a little rally yesterday to around the 76, probably I think it was $78, I can't remember now, but basically we had a rally on rumours of OPEC, etc., cutting production. Nothing really materialised, and surprise surprise, oil is back at $74 as we speak. So that's not exactly a good sign, so hence the reason why I expected that gap fill. Once it was closed, then obviously the FTSE will start to move lower with this oil price index, okay, or oil and gas index, okay, with regards to all the oil and gas producers of the FTSE. Now, retail sector, this is one that's taken me by surprise, given the fact that we did have a report out with regards to the supermarkets, and obviously their growth going forward is not looking very spectacular. We had an unfilled gap below. Obviously we've gapped higher and obviously stayed higher, so slight concern, especially with regards to Sainsbury's and then Tesco's and the situation there, with regards to Next, with regards to Burberry, so on and so forth. So the consumer exactly isn't helping any recovery right now. So certainly looking at it from that perspective, certainly was bearish given the headwinds and the concerns that we have in the retail sector. Okay, now you can argue that's a Christmas play. Okay, understand, certainly a valid argument. Okay, so with regards to the building and construction sector, with the inflation data coming out slightly better than expected today, obviously, and Mr. McCafferty now talking about interest rate hikes, then obviously that itself lends to higher interest rates, which in turn hurts the building sector, and that's the reason why I was expecting a move lower on the building sector. This is the house construction materials, given the fact that we've got higher rates, and then obviously down we go. Okay, now British Land did report earnings today, and they were relatively good, but the markets didn't really react the way in which everybody was anticipating. So it's something else that certainly needs to be taken a look at. Okay, but from my perspective, obviously inflation higher interest rates, and a hawkish central bank is not good for stock markets. Okay, so the mobile telecom sector, obviously after Vodafone, we've sort of stalled now. Okay, so Vodafone rally is all more or less priced into the market, and obviously you can see here that we are looking for this potential gap fill here, and obviously gap fill 2 gaps below, and this uptrend here certainly seems to be looking very exhausted now. Okay, so looking at this potential move here, and looking at a potential breather. Okay, so rising contracting wedge, looking for a potential break, which again is negative for the FTSE 100, so always bear that in mind. Okay, now, okay, so keep going. Okay, so you've got the hotel sector. There was news about bird flu, okay, in Hereford. So the hotel, and travel and leisure sector will certainly be negative. Okay, so mining sector, as we already know, you can see here, really weak. Okay, copper and iron ore were down overnight, with the Shanghai and the Hang Seng getting smoked. Okay, so basically everything is bearish. That's the only thing I can observe. That's the only thing I can allude to. So my bias certainly remains bearish. We're into the 200 MA on the daily chart on the FTSE 100. Now I will bring up a chart of the FTSE on a 10-minute chart. Let me just see if I can give you a little insight there and see exactly what's happening. As you can see here, we've stalled out. Okay, we've made 1, 2, 3, 4 attempts at breaking that 6, 7, 10 level, and we failed. Okay, so that in itself is, when a market fails to make higher highs, what does that mean to you? It means bearish. Okay, and bias certainly is potentially changing. I'm looking for a reversal. Downside target more than likely will be the 200 MA or the gap fill level, or gap level, which was this morning at 6670. So these are basically the areas that I'm looking for. Okay, and certainly is indicating resistance. A lot hinges on the US markets. I understand that, and they certainly seem to be short squeezing higher and higher, and certainly no stopping it there. Okay, and that's something that I'm going to be keeping an eye out for. S&P 500 has failed its H&S formation. Again, that's a concern, but we are coming into pivot R3 resistance, and the FTSE is certainly pushing higher into the futures market around the 6715 level. But like I explained, higher we do have a higher PPI data that came out in the US as well, so that in itself will create tapering phase, and that will be negative for the US markets from my perspective. Now I'll do a separate video on US markets, but from the FTSE, I hope I've given you my insight as to why I hold my bearish view. Okay, so risk on, risk off, wax on, wax off. Goodbye now.